You already know you're supposed to invest. Put money in the market, let it compound, build wealth over time. You've heard it 100 times. And yet, the highest returning investment you will ever make costs nothing. Not a dollar, not a subscription, not a course fee. And most people walk past it every single day without noticing it's there. That investment is the gap between what you know and what the people around you know. Close that gap in the right direction, and your earning potential doesn't grow, it multiplies. Ignore it, and no amount of index fund contributions will close the difference. Here's what that actually looks like in numbers. The Bureau of Labor Statistics tracks median weekly earnings by education and skill level every year. In 2023, a worker with only a high school diploma earned a median of $899 per week. A worker with a bachelor's degree earned $1,493. That's not a 10% difference. That's a 66% difference in weekly income, every week, for decades. Over a 40-year career, that gap compounds into something that dwarfs almost any investment return you could generate in a brokerage account. But here's where it gets more specific and more actionable. The return on a targeted skill isn't measured in percentages the way a stock is. It's measured in what economists call human capital, the accumulated value of everything you know, everything you can do, and every problem you can solve that others cannot. Gary Becker, the Nobel Prize-winning economist who pioneered human capital theory in the 1960s, argued that investing in yourself is not fundamentally different from investing in a business. You're putting resources in now, time, attention, effort, in exchange for a higher stream of returns later. The mechanism is identical. The asset just happens to live inside you. Becker's research and the decades of work that built on it showed something counterintuitive. The returns on human capital investments often exceed the returns on financial capital investments, especially early in a career. The reason is leverage, a skill you acquire at 25 compounds across 40 years of earning. A $1,000 investment in the stock market at 25 at a 7% average annual return becomes roughly $14,800 by 65. A skill that increases your annual income by $5,000, a conservative estimate for one well-placed certification or expertise area, compounds over 40 years into $200,000 or more in additional lifetime earnings. And that's before you factor in the raises, promotions, and opportunities that skill unlocks along the way. This is the investment that most personal finance content ignores, not because it isn't real, because it's harder to put in a pie chart. Now let's get specific about what this actually means, because invest in yourself is one of the most overused and underspecified pieces of advice in existence. It gets repeated constantly and almost never defined. So here is the definition that matters. Investing in yourself means deliberately acquiring a skill, credential, or piece of knowledge that the market values, and that directly increases what someone will pay you for your time. That last part is the filter. Not every form of self-improvement qualifies. Buying a gym membership improves your health. Reading novels improves your mind. Meditating improves your focus. These are all worth doing. But they are not investments in the financial sense unless they directly increase your market value. The ones that do are specific. A programming language, a professional certification, a second spoken language in a field where it's rare, a specialized skill in a growing industry, the ability to sell or communicate or analyze at a level your peers cannot. The economists Lawrence Katz and Alan Krueger studied wage premiums across different skill categories throughout the 1990s and 2000s. Their research consistently found that skills in undersupply, skills where demand from employers exceeded the number of workers who had them, commanded wage premiums of 20% to 40% above the median for otherwise identical workers, not 5%, not 10%, 20 to 40% for the same job title. The only difference was a specific capability the other candidates didn't have. That is the stock market equivalent of finding an asset that is structurally undervalued, except you don't need capital to buy it. You need time. Here is where most people stop themselves. They look at the learning curve, the hours it takes, the discomfort of not knowing something yet, the gap between where they are and where they'd need to be, and they decide the return isn't guaranteed enough. And they're right that it isn't guaranteed. No investment is. But the logic that keeps people from investing in skills is the same logic that keeps them from investing in the market. They wait for certainty that never arrives, and in the meantime, the compounding they could have started never begins. The research on this is pointed. A 2019 study from the National Bureau of Economic Research analyzed the wage trajectories of workers who completed targeted skills training programs versus those who didn't. Over a 10-year period, the workers who invested in skill acquisition earned on average 18% more than their counterparts, not because they started at higher salaries, but because they compounded upward faster. Each skill unlocked the next opportunity, which unlocked the next. The ones who waited stayed at their baseline. Now let's talk about the cost. Because the $0 investment figure is worth unpacking. Most of the highest return skill investments available to working adults right now cost nothing or close to nothing. YouTube has more high-quality instructional content than most universities offered a decade ago. MIT, Harvard, and Stanford have published thousands of course materials for free online. Coursera, edX, and similar platforms offer free auditing on courses that cost hundreds of dollars for certification. The local library, still, quietly, one of the most underused wealth-building resources in existence, provides free access to professional books, online learning platforms, and databases that businesses pay thousands of dollars a year to access. The true cost of investing in yourself is not money. It is time and attention, two things that are scarce, but not scarce because you don't have them. Scarce because they are being spent elsewhere. The average American adult watches approximately 4.5 hours of television per day, according to Nielsen data. That is not a judgment, that is a reservoir. 1 hour redirected from passive consumption toward deliberate skill acquisition, just 1 hour, is 365 hours a year. That is enough time to become meaningfully competent in a new skill, complete a certification, or learn a language to a conversational level, every year, for free. The compounding here is not metaphorical, it is mathematical. The skill you build this year opens a door that a higher salary walks through. That higher salary, invested in the market, compounds financially. Two compounding forces running simultaneously. Most people activate only one. This is the thing that changes when you start seeing yourself as an asset, not in the abstract motivational poster sense, in the literal economic sense that Gary Becker described. You are a bundle of skills, knowledge, and capabilities that the market prices. That price is not fixed. It is not determined by your employer's goodwill or the economy's mood or how long you've been at the company. It is determined by how rare and valuable your capabilities are relative to what the market needs. And unlike a stock, no one can take your human capital away from you. A market crash reduces your portfolio. A bad year reduces your bonus. But the thing you know, the problem you can solve that others cannot, that stays. It compounds invisibly, silently. Every day you keep using it and building on it. So what separates the people who actually do this from the people who mean to? The research from Shlomo Benartzi and Richard Thaler, the behavioral economists whose Save More Tomorrow program demonstrated how default choices and commitment devices dramatically change savings behavior, offers a useful parallel. Their core finding was that people consistently intend to save more, but fail because the decision requires ongoing active choice under conditions of present bias. The preference for immediate comfort over future benefit. The same mechanism operates with skill investment. You intend to learn, you mean to start the course. The hour arrives and something easier is there instead. The solution Benartzi and Thaler identified for savings, automation, commitment in advance, removing the moment of choice, translates directly. You don't decide each morning whether to invest in yourself. You schedule it, you block the hour. You remove the decision from the moment of least resistance. The skill builds not because you feel motivated on any particular day, but because the system runs whether you feel like it or not. One skill, 1 hour. Scheduled, not hoped for. That is the investment. It costs nothing. It compounds for decades. And it is the one the spreadsheets rarely show. Open your phone right now and identify one specific skill that would make you meaningfully more valuable in your field or in the next role you want. Not a vague category, a specific skill. Then find one free resource, a YouTube channel, a library book, a free course, and schedule 1 hour this week to start it. Not to finish it, to start it. That single hour, repeated weekly, is how the highest returning investment you will ever make begins.